What's going on, agents? Welcome to SPY Trades. My name is SPY. I'm sorry about the little absence. I hope you didn't miss me too much, but we're back and ready to help you tackle the market. Tonight we're going to discuss SPY and QQQ options price targets, along with some upcoming economic data. Oh, sorry, one sec. Hello? Hey, Elon. What's up? Yeah, bud. Can't do Tesla today. We don't have time. Yeah, I heard you're going to launch a new vehicle. Congrats. But how's the toilet paper situation going over at Twitter? Oh, we don't talk about that. All right, bud. I'll see you Tuesday for pancakes. Later. Markets are beginning to melt, and I know you have a lot of questions, but we don't have a lot of time, so let's get into it. At the end of last week, CPI and PPI both reported rising month-over-month prices, as well as annual price increases that were larger than economists had expected. Even so, bulls kept it fairly together, and the SPY ended the week with just a few points below the important 400 line. Despite the bears raking up some big wins last week, it still looked like this latest round of tug-of-war was anyone's game. And then the Fed minutes were released, and another inflation indicator was presented. The Personal Consumption Expenditures Index, also known as PCE, came in way hotter than anyone was expecting, and more Fed officials came out last week to publicly voice their concerns that inflation remains too high. Look, I'll be the first to say the bulls have put on a surprisingly strong show the first weeks of the year, but this is going to be a big hurdle to clear for the rally to continue. There weren't a ton of bullish events that happened, and people were just ready to move into a more risk-on environment. We've also now seen bearish signs from the SPY 400 wall breaking down, January CPI coming in hot, and the CME FedWatch tool that rates the number of people expecting a Fed rate hike of 50 basis points has tripled from 9% to 27%. They say the market climbs a wall of worry, but how high is too high? Taking a look at the SPY daily chart, we can see the price action approaching major downward wedge, with the upside potential at the 0.382 Fibonacci just under 399. Expect a retracement off that fib line if we manage to get there, with a strong downside, most likely testing the major downside wedge line in the coming days. SPY Gamma Negative sits at 391. If we look at the SPY on the 1 hour chart, we can see the same price action is happening with the Fibonacci line coming into play at just under 399. This proves to me that the Fibonacci retracement level will play a major part in either a rejection or a bullish move to the upside. Gamma Max for SPY tomorrow sits at 413. Moving over to the Qs, we can see another similar picture forming, with Invesco wanting to test the major downside wedge in the coming days if bears can stay on current trajectories. It's currently sitting on a major support of 290.75, but tomorrow could lead us to see more clearly which direction it wants to take. But with big tech yearly earnings screaming coming bear market, our money will be on the downside. Look for some capitulation at open, with calls selling off and flipping to the more bearish positions in anticipation of a hard downside move. A hard red Monday will probably bring a sideways green day on Tuesday, allowing for large institutes to reposition, but I'm expecting a hard red week with economic indicators all pointing towards more red to come. Now over to the 15-minute chart on the Qs, we can see the bottom of the fib retracement at 290, where a rejection of that support would probably mean a move to just under 287, with the next historical support at 282. It's just not looking good for big tech. Sorry, bulls. As for our SPY and QQQ option strike targets, we're looking at the 395.50 level for SPY. A drop under that could signal a sharp move to 393, so we're going to target the 395 puts. On a SPY move to the upside, we're looking for a gap fill from over 397 to 400. We'll target a 397 calls if that play presents itself early enough. As for the Qs, a move above 292.50 could signal a gap fill to 296. We'll target 293 calls if the setup is right. A downside move under 291 could test 289, so our target there are the 291 puts. Remember, a golden rule of mine is that I don't chase out of the money contracts. I like to play in the money and sometimes slightly out of the money on regular days. The reason? You get better intrinsic value on your contracts, and the theta decay is much less when your contract is in the money. Knowing how the contract reacts, ITM and OTM, will help you better set your risk aversion, set better stop losses, and take better profits. I'll be getting into this in the future with my upcoming options course, The Classified Papers, where I go into full detail teaching you all about the options Greeks. We go into full detail of different trading strategies, and I teach you how to take consistent profits and get into the mindset of being a profitable options trader. This course will be coming out later in the year. Anyways, agents, I hope you found my video educational or at least entertaining. Please smash that like button and don't forget to subscribe to stay up to date on everything at SPY. Have a great trading day, and I'll see you in the trenches.